All right, so I did these 3 earning trades yesterday on Alta, VMW, and Workday. All put spreads expiring Friday, so expiring today, August 28th. And they were all at expected moves. So as you can see, 200 strike, which was about 20 points away from the current market price. So basically what I do is I look at the value of the straddle. So if I look up Alta, for example, I look at the value of the straddle, which gives me the expected move. So I look at the straddle value at a 220 strike. Right now market is going to open in 2 minutes. So if I look at the 220 strike, it doesn't show right now, but yesterday it was trading at around 20 points. So I picked the strike of 200 as my short put, and then my long put for protection is 195. So my max loss on this trade is $5 minus what I received as credit, which was 88 cents. So $4.12. Now, the way I win is if Alta stays above 200 come Friday, come expiration. And actually, if we look at Alta, you can see that it's trading at 253. So it took a big jump from 220 to 253 after earnings. So this one's going to be a winner. I might even let it expire worthless so I don't have to pay commissions to buy it back, since it's 50 points away from my short strike. VMW, same thing, same principle, same idea. Went at expected move, took the short strike of expected move, which was 133, and did a 5-point wide put spread. So my max loss is $5 minus the premium that I collected, which was 80 cents. And you can see today it looks like it's going to open at 143. So it didn't move much, actually. It stayed at the same price. This one I might try to close because it's not that far away from my short put. It's 10 points away. Or maybe I'll just let it expire worthless. And now let's look at Workday. Same idea. So I looked at the expected move by looking at the straddle value at the current market price. And I went that much far away from the current market price to choose my short put. And then I did a 5-point wide put spread. Collected 80 cents on that one. So 197 minus $1.17. And if we look at where it is right now, it's at 239, 240. So it took a jump as well. And now market is open. So I'm going to go do my SPY put spread that I always do. So you actually get to see it live how I do it. So SPY, I look at the straddle. I look for 7 days expiry. So it's going to be September 2nd. No, that's 5 days. So September 4th. Crap, SPY is flying. It opened at 349.44. Right now it's at 349.38. So the straddle value is about 7 points. So I'm going to go 7 points lower. So I'm going to go to 342 as for my put spread. It is kind of scary, but what are you going to do? So 342 and 337, 5-point wide. So this is my put spread. I can collect 56 cents. I'm going to do 2 contracts. And 56 cents, 57, nice. Let's go 57, send order. Actually, let's go 58, send order. All right, it looks like it's dropping. Well, let's take a second here. Let's go 59, send order. So sell to open 2 SPY, 342. Buy to open 2 SPY, September 4th, 337. So 5-point wide, collecting 118. Actually went to 60. Send, now it's going to 61. All right, I'll just leave it at 60. Or maybe I should wait. It looks like it's going to drop. I said the straddle was 7 points, so 349 minus 7. Yeah, okay, so let's just go to 62. Send order, and they got filled. So my SPY got filled. This has 7 days to go, so I just leave it. Let's look at my other trades. Let's see how much I can close them for. Wow, so it's 0. So I'm not going to pay I'm not going to pay commissions if it's trading for 0. Let's look at VMW. It is also trading for 0. So I'm just going to, I guess I'll just leave them. I'll try to let them expire worthless. Workday has some value in it, but obviously, what is this? This is a debit or a credit. Looks like I can get a credit to close it. Obviously, that's a mistake. But yeah, so yeah, it's very little. 247, my strike's 200. So I'm just going to, I guess these earnings trades, I'm just going to let them expire worthless so I don't have to pay commissions. But basically, I sell them because usually around earnings, there's high volatility. So the premiums are overpriced. So you want to sell something that's overpriced. And hopefully, the stock doesn't move much after earnings. Because it could move down hard. If it moves down hard, all these earning trades are losers, and I could lose $400 on each trade. But the idea is if that happens, then I'll sell a call spread against it, try to reduce max loss. I'll sell a call spread at the exact same strike. Given that there's 1 day left, I'm probably going to get very little from the call spread. But the probabilities are more on my side that not all 3 of them drop more than the expected move at the same time. It's possible. Anything's possible, but it's just probability wise, you're going to have more winners than losers. And since you can control your losers because it's a spread, you're not losing an unlimited amount. It's a defined risk trade. You know how much you would lose. Eventually, the more you play them, the more you'll win. And lately, everything's been going up in a ridiculous fashion. So if I did the call spread on the other side at the expected move, I would have lost on the call spread. So that's why I prefer put spreads. In general, I've done enough of them to realize that I win more on the put spreads than the call spreads. So yeah, my SPY put spread is already losing money, as you can see here. Yeah, SPY is dropping. I guess I should have waited a little bit, but I like to sell at the open no matter what. I don't want to start timing it or guessing when's the best time to sell. I just sell at the open, and 7 days later, I know that there's an 80% chance that it stays above my strike. And usually I try to close it before expiration. So if I collected 62 cents, I'll try to close it for 30 cents, for example. And because it's only 7 days, the decay is going to be really fast. All right, so I guess there's nothing to do with these earning trades. I'm just going to let them expire worthless. But what I like about them is that they're 1 day trades. And basically I'm getting as much premiums as I would if I did a 30-day trade or even a 7-day trade. So that's what I like about them. They're a little bit exciting because it's really just 1 day. Instead of waiting 7 days or 30 days, I get the answer. I know right away if it's a winner after 1 day. So that's what's good about it. And I'm not risking much. It's controlled risk. And just to give an update on my Netflix trade that I talked about yesterday, I ended up closing the trade for a $14 loss combined. So they would have been both winners if I had left them, because if we look at Netflix, I think it's trading in the 320s. So both of my call spreads would have been winners. Actually, wow, came back up again. So maybe the 345 would have bothered me a bit, but still, I could have closed them for 50% profit yesterday. Instead, I closed them for a small loss, but it's worth not having the stress or the headache or being worried about it all day. And anyways, I don't like call spreads, so I know I should not have sold call spreads. It's just that I saw Netflix jump up yesterday, or before yesterday. So I felt it would be a good idea to sell a call spread against it. But regardless, took a small loss, whatever. Hopefully I'll make it up with my earning trades if they expire worthless, which they should. Let's just check on them again. So 245, 200, I'm good. 141, 133. See, this one's dropping a little bit. This is not cool. But yeah, I don't even know what to buy it for. It's not trading. Maybe I'll have to buy it for 5 cents. 141.73. And let's look at Workday. 142 versus Workday is 245 versus 200. So yeah, Workday and Alta, I'm going to leave. Let's look at VMW. Let's think about it. 142 and get back up again. So this one I am buying back. So if I'm buying back, I have to buy for maybe 15 cents. Yeah, it's going to be too much for nothing. And this one, no one is buying, so I can't even sell it. Basically, I just need to buy the short put. I don't need to buy... If I really want to close it, I just have to buy the put that is shorted. I don't need to buy the put that is long. So I just need to buy this one. It looks like I'm going to have to pay 15 cents. Or the last traded price was 12 cents. Plus commission, it's going to be almost $20. And my max profit is $80, so it kind of sucks. All right, let's just hold on to it. Let's just hope it expires worthless. It's coming back up again. All right, I'm going to try to let it expire worthless. So I'll keep an eye on it. If it drops below 139, I guess if it eventually it trades for like 40 cents, then I'll just close it for 40 cents and whatever, I'll take the risk. All right, so if you have any questions, leave in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. Also, check out the other links below. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.